Hello friends. Today I'll be talking about a very important concept that's used time and again in Forex. It's called Fibonacci, and how do you combine Fibonacci with price action and use it successfully in Forex? It has been tested time and again that Fibonacci number acts as one of the most important inflection point in an extended trend. Now we will see that why and how this Fibonacci can be used in Forex trading. It's very important to understand price action signals, yes, but price action signals, they don't act on their own. They act on certain parameters, certain numbers, and that we will derive from Fibonacci. So why do we use Fibonacci levels? Um, as we know, the trading is all human behavior and it's an application of mathematics. Everything in the universe we have is in harmony, and it can be seen that the golden ratio, as presented by Fibonacci, must be satisfied to have an equilibrium. As we all know, that trading is up and down of human behavior. And to have a balance, it must satisfy the Fib levels to attain price equilibrium. Fib levels, or the Fibonacci level, is a future projection tool in trading. Rest of the indicators are the past event indicators, or they are lagging indicators. So there are two things to look for in trading. One is key levels, which can be the daily levels or the Fibonacci levels. And second is the price action signals. So if you have price action signals and you have Fibonacci or any key levels, you have a winning edge. Now a lot of traders will tell to me that okay, why don't we use moving averages or MACD, and they all are good. They all work great. I'm not denying this fact, but they work later. The action has started in the market before these signals, which is MACD or moving averages. They're able to see and they're able to tell you that this is happening. So if you're using any of those indicators, good. But let me tell you one thing, professionals are not using that. Professionals are using levels and they're using price action signals. Okay, so if we combine the price action with the fib levels, we have an excellent winning edge. My friends, this is the key to your Forex. Once you combine fib levels and you have price action signals, you are a winner in the market, because fib levels are the levels that are mathematical harmonized ratio, and you cannot beat the nature. And price action is what the human behavior is happening, what is happening in the market right now. And you look at those signals. So once you have the signal and once you have nature, once you mix them together, you have an excellent winning edge. So now I'm going to talk about how many players are there in the Forex and the commodity market. So there are basically four major players in the market. One is a long-term trader, monthly and weekly. They're the biggest traders out there. Then there are medium-term traders, or the end-of-the-day signal traders. They are called big traders. They are not the biggest, but they are really big. UI and professionals, they cannot beat them. Then you have medium to short-term traders, which is professional traders are kind of in this range between the day and the 4 hours. And then you have day traders, which is less than 4 hours, 1 hour or less time frame. They are newbies, short-term traders, people who are starting up. People are excited, they want to make quick money and get in, get out. I'm not denying that any of the trading strategy or the newbies are not making money, or yes, they are making money, but they are taking risk more, and they don't end up making as much money as the professional traders do. How the professional traders make money is by using key inflection points, key signals. Okay, so 95% of the people will fall under day traders. 3% of the people are professional traders, and 2% are big banks, hedge funds, insurance companies, etc. So those are the long-term traders. They are the one who move the funds. You know how you and I and a lot of people in North America, even the world, they have funds. You invest in a fund and then you get a return on the fund. Okay, so these people they move the market. They make the millions of dollars they put in the market to move the market. You and I don't have that much money to move the market. Okay, so whatever the big boys are doing, you better be doing that, because if you're not doing what big boys are doing, you're going to kill yourself, my friends. So how to draw and use Fibonacci levels? So since the biggest and the most deep pockets are the banks and the head, and hence weekly Fib levels are extremely important for price inflection reversal points. Step one. So this is the steps we will be following to create it. Like once we go through the presentation, I will go to the chart and show you live as to how this thing is happening in the market and how these Fib levels are met time and again. Okay. So we have step one. So you take a chart and you take a weekly chart of an extended move in the market. Okay, by the way, here I'm assuming that you have the knowledge of how to draw the Fib levels, okay? But if you don't know, you will see how I draw the Fib levels. So you take the weekly charts of a price pair, and you draw the Fib levels of an extended move in the market. Step two. Now move down to the same chart, you move down to the daily chart and draw the key support and resistance level to identify the direction of the trend. This is one important thing you need to keep in mind. I have a lot of other courses, a lot of other tutorials that will be coming up showing you how to identify the direction of the market. So you move down to the daily chart and identify the key levels of support and resistance. Now, step three. Now you go further down. You move to the 4-hour chart. Okay, this is where the professionals are sitting. So you go there where the professionals are sitting. Now you move to the 4-hour chart and draw its key support and resistance levels. Okay. Now you have 3 levels. Okay, weekly, you have daily, and you have 4-hour. I will show you in the market live in front of you that these price points or these levels, they are satisfied time and again. Okay, price move between these levels all the time. Okay, now you observe the price action signals at the daily or the weekly levels. At this point you will get an idea of where the confluence. Okay, confluence is like when 2 or 3 levels are meeting. Okay, 2 or 3 levels are meeting. Okay, and then you look for price action signals in the direction of the trend. Okay, if you are using 4-hour, your direction will be directed by the daily guide, the daily chart. Okay, the direction of the daily chart is down. You have to look for confluence at the daily level and weekly level, or only daily level, and see where the price is going to go to. Okay, and you don't want to beat the daily guy if you're working on a 4-hour chart. The price action signals are very important to observe at these levels. And once you have them, take a trade if the risk and rewards make sense. And step 4, the last step. Okay, once you identify something is happening in the market, you move down to 1-hour chart only to observe the finer details. Before pulling the trigger on your trade. Now, let's go to the chart and we'll just make a sense of what we're talking here. Now here we have you have euro pound weekly chart. So what we'll do is we'll draw a fib level here. So this is an extended move in the market, as we all can see. Oops, sorry. Okay, so as you can see, this is an extended move in the market. Okay, the price moved from here all the way up, and then it came down. Okay, generally, once you have a price move that high, it wants to retrace back to 50% level. Okay, as you can see, price moved back, it moved back to the 50% level. And it's gonna keep on bouncing between these levels. Once you have 50% level, it moved up to the 23% level, and then it moved down back again to the 50% level. Okay, so as you can see, the price is bouncing between this level. Okay, that seems very interesting. Now let's move back to the daily chart. Okay, so we have daily levels now, and then we will see that what is happening in the market and how to draw the levels. As you can see, the price moved up here, and then it went, okay, from here it's coming down. So I'm just going to draw the level. You'll get an idea of how to draw the levels. Okay, it moved up, and then from here it broke this level. Okay, so I'm just going to draw this level for you to understand. And so below this level is all sell. Okay, you have retracement, retracement, retracement. Okay, and then there is again a little bit of retracement here. All right, right here, and then you have another right here, level right here. Okay, so the price moved down here, and then it went back, and then it breached, and then it held here for a bit, came back up, and then it went down again. Okay, so anything you have this line and this line, anything below this line is all sell. Okay, so anything below this line is all your sell at the daily level. Now it came back up here. As you can see, the price came back here. There was a big rejection where at this level. Okay, and then it came back to this level, and then it breached. Okay, and it breached and held up. Okay, so because it broke this line, so the price now is moving up. Okay, and it moved up from here. Okay, and it breached which guy? It breached this guy right here. This guy right here, or you can say this guy right here. And the price is all up from here onwards. I'm just showing you exactly how to draw the levels, and you will get an idea. Whatever I'm doing here is extremely important. You just cannot jump in the market. You have to do a little bit of analysis and see which side of the direction you want to be in. You move up, okay, it's breached, and it's come back, and now, as you can see, ever since the price has moved up and it has come down to this level, it hasn't broken this level. Okay, now this is what I was saying. This is the point of confluence. Okay, this is 50% level right here, and then you have this daily level right here. Now let's go back to the 4 hours chart. All right, now 4 hour looks very interesting as well. In the 4 hours, you can see the price was coming down here. I'm just going to draw a 4 hour chart here. It came down here, and over here it breached this level. I'm going to change the color of this so that you understand this is 4 hour chart. And okay, we are studying this line right here. Look here, the price moved back up, and then it breached, held below, breached, and then over here, oops, sorry. So as long as we have price moving down here, moving back up, down, as long as we are below this level, it's all seller's territory. So we have coming down here, you moving back up, and then over here we can see the price breached, and then it came back up again. So since the price breached this level, we are in something called sellers area. We are in the buyer's area here again, okay? But it came back crashing down, okay? And who is the one who broke this level? It is this guy right here, okay? This was the final inflection point, and the price moved down from here. So this guy broke this level right here. Now you have the price in the downward direction, okay? There you go. Okay, so you can see the price came back up, and it's again trying to go up. Now, if you have this information, you have a winning edge. Who's going to be the winner? Winner is going to be the 50% guy, and winner is going to be the daily guy. So if the daily guy, if we go back to the daily chart, if the daily guy is up right here, and you have the 4-hourly chart going down, who's going to be the winner? It's going to be the daily guy, okay? And on top of that, it's happening at the 50% fib level. You have what's called a winning edge in the market. You can safely take a price, you can safely take an entry here in the market, and you can take a profit right here. That's your profit target. You enter the market right here, okay? You can take a market right here entry, and then you can go all the way up here. Your stop loss is going to be somewhere here. So just going to give you an idea of that's going to be your entry. And that's going to be it. So you have, oops, sorry, my bad. Sorry about that. I'm just going to remove this. Anyway, so you can see that's your risk right here, and that's your reward right here. That's how you trade in the market. As you can see, the market is moving and making an extended move right here. Now, if you go back to the 1-hour chart, you can even precisely enter more as to where the stop loss is going to be, okay? So let's go back to the 1-hour chart. We'll get an idea of what is happening here. So the price is moving up, retracement moving up. Now, this is the point where you can enter the market. Apparently, you can see this is the price where it broke. This is the line right here. Okay, so you can enter your market right here at this point, and you can see the market came here and it's going up. It's going to go right here. Now, where is going to be the stop loss? The stop loss can be at the point where this all started, okay? You can add the stop loss right here. That's going to be your stop loss. Okay, and look at this. This is your target, this is stop loss. This is how you trade, my friend. This is how you get in the trade, and this is how you make money. As you can see clearly, the markets are going crazy up right now, okay? In fact, I'm so tempted, I'm going to actually make a buy signal on my personal trading right now. As you can see, even further going up. It's going up right now. It's going up like crazy, okay? Hopefully I make sense. If you guys have any questions, feel free to email me. And my email is maxforex44@gmail.com. I hope I have made clear how this price action signal and the Fibonacci levels work for you. If you have any questions, feel free to contact me. Thank you very much.